All right, Tim. We're official now. We have ourselves an official studio.
Damn, man, this looks sharp as bones, brother.
You sound good too. You look good, sound good.
I feel good, man.
We're on 4K. It won't come across 4K, but we're good, man. How you doing?
I'm doing phenomenal. Although I'm trying to figure out what are they doing with rates. What's going on in that world, Brian? I'm serious.
Well, I want to talk about this Joe Biden taking money from the rich and giving it to the poor, like fiasco thing that I've been hearing about. I honestly don't know about it, but before we do, I was gonna tell you a quick joke my mom used to tell.
All right, what you got?
About salesmen. Have you ever heard the joke about Ronnie the toothbrush salesman?
No, I haven't.
All right, so my mom used to tell me this joke when I was a kid, and I didn't even think it was funny when I was a kid. But then when I got older, and somehow something clicked one day, and then I think this joke's funny now. So this is back in the when did they used to do door-to-door toothbrush sales? We'll say
back
the 50s.
In the day.
Back in the days. Back in the day, there was this company that sold toothbrushes door-to-door, and there was an ad in the paper for door-to-door toothbrush salesman. So This guy Ronnie goes in and he wants to apply for the job, but he has a little bit of a challenge because he has a lisp.
Okay.
So he goes in and talks to the sales manager, and he's like, "Hi, Mr. Thompson. My name is Ronnie, and I would like to sell toothbrushes, and I think I'll be a good toothbrush salesman." And he says, "All right, listen, Ronnie. You seem like a nice young man, but you have a little bit of a speech impediment, and you seem like you have a little bit of a stuttering problem. We have other jobs here that would probably be a good fit for you. I'm just not sure sales is it." And he says, "No, sir. No, I know I can do this job. I will sell a lot of those toothbrushes, sir. Just please give me a chance." He says, "All right, no problem. I'll give you a chance." So he gives him a case of toothbrushes, and then you got to go out and sell them. Whatever you sell, you come back the next week and you refill your case, but there's like a minimum. So he comes back the next week and he's like, "Hey, Ronnie, how you doing, buddy? Did you sell any toothbrushes?" He says, "Well, sir, I only sold 2 toothbrushes this week, but I would like to have another chance, sir, to sell the toothbrushes." And he says, "You know what, Ronnie, like we did talk about this. I'm just not sure that you're a good fit for this job. Listen, we got these other opportunities here." He's like, "No, sir, I really need this opportunity. Please, I have this idea that I'm going to use. I'm going to sell a lot of toothbrushes, and I have like a family, and I'm going to do this job. Please, just give me one more chance. So that's all I ask for." He says, "All right, no problem. Come on back next week." So he comes back next week, says, "All right, Ronnie, buddy, how'd you do, man?" "Well, I only sold 5 toothbrushes, but sir, please, just before you say anything, I have a genius idea." And he says, "Nah, Ronnie, listen, I'm sorry. It's just not working out. I can't keep giving you these opportunities we could be giving somebody else, and you're going around and you're knocking on doors, obviously not working. I'm going to have to just let you go." And he says, "No, sir, please, listen, just one more chance, sir. I have a genius idea, and I very much promise that I will sell the entire case of toothbrushes. All I need is please one more chance." He says, "All right, Ronnie, listen, this is it. If you don't sell the toothbrushes by next week, the entire case, just don't come back. Just drop off toothbrushes, and that's it." So the next day, Ronnie comes back, and he says, "Sir, I need 7 cases of toothbrushes immediately. I sold all of them." And he says, "Ronnie, nobody's ever sold a whole entire case of toothbrushes in one day. What did you do?"
Right.
He says, "Well, I told you, so I have a genius idea. So what I did was I went outside the airport where they come off the airplane, and I set up a little booth. And on the booth, I set up a little sign that says free chips and dip. And then when they come off the airplane, I would say, 'So, would you like some chips and dip?' And they would say, 'Oh, thank you.' And then they would take the chips and then they put in the dip, and then they would say, 'Oh, this dip, it tastes like shit.' And then I say, 'Yes, it is shit. Would you like to buy a toothbrush?'"
And that's creative. Creating demand. I love that idea. I'm not sure that's the right strategy in mind, but you're creating demand. That's a win-win, man. That works.
So, Tim, tell me about this thing. I had someone call me up, and he was like, "Is this true? I'm furious. So Tommy, that's for you, brother. Tim's going to answer your question. I honestly don't know anything about this.
So I love this. This is a great concept. So first of all, they named it Bidenhood after Robin Hood, right? Rob from the rich.
I mean, is that like Obamacare, where it's actually not Obamacare, but they just call it Obamacare, or is it actually called Bidenhood?
No, it's just the nickname.
Okay, so it's the nickname.
Calling it.
Okay,
and it's kind of wild. If you guys going backwards, if you will, Fannie Mae and Freddie Mac got basically taken by the federal government after the Great Recession. They stepped in to help out the Fannie Mae and Freddie Mac, right? And
in 2008.
Yeah.
Okay,
right?
so the federal government stepped in. They took over Freddie Mac and Fannie Mae.
You got it exactly right. And when they did this, the whole concept was it was a temporary measure. Like they helped out all the banks. And then the banks got back into business, right?
Yeah.
Well, they kept Fannie Mae. They said, you know what? We like this. There's a lot of cash coming in, a lot of profit. And they've never given it back. They just didn't have the right leverage, I think. Somehow the banks seem to have the right leverage. They also seem to be on the administration, but that's another story.
Yeah.
So all these hundreds of millions of dollars that Fannie Mae and Freddie Mac have been making have been going into the federal government coffers. And then the federal government said, you know what? We need to do something more to help the underprivileged borrowers.
Yeah.
The folks that just have some rough credit. Maybe they don't have the credit
scores. And I'll just say this before we even get into this. I was always under the impression, okay, I was a mortgage lender. I used to work with Tim. If you have an FHA loan and you have a 640 credit,
sure,
a 740 credit, and an 840 credit, 3 separate borrowers, 3 separate credit scores, the interest rate's not all that different.
FHA not.
Okay, but isn't that in some way the same thing? The 640 credit score is benefiting from the 840 credit score because they really like add, subtract, divide, and multiply. When it's all said and done, they come up with an interest rate.
Right.
And then they charge, mortgage insurance and then whatever they call it, funding fees and whatnot. Like there's fees built into these things that make it so that it's spread equally. So even if you have a 640 and an 840, you're pretty much getting the same pie.
Correct.
That's subsidies. That's still subsidizing, right?
Yes, it is. But with a government institution. These are semi-private institutions.
Okay.
And what blows my mind is we're creating hundreds of millions of dollars of profit has been coming from Fannie Mae and Freddie Mac, supplementing the government. And now the Fannie Mae and Freddie Mac, the great administration, the Biden administration says, you know what? Let's go ahead and charge additional costs to the good credit scores, people who have worked hard to keep their credit on time.
All right, so just explain what you mean. You're saying that if
680 or higher credit scores are going to be hit with a penalty, basically, hit with additional costs and fees, the rate's going to be slightly higher. They're going to pay more.
All right, time out. So they're going to have a higher interest rate?
Higher costs. It's going to either equate into interest rate or in points, one way or another.
And what are these for government loans like FHA, VA,
this is
conventional?
Fannie Mae and Freddie Mac conventional financing, which are not supposed to be.
So that was like the other side of that coin that we were just discussing with FHA, VA, USDA.
Those are government,
right?
Those are government backed.
With those loans, if you have a 640, 740, 840, your payment is kind of the same. It does get a little bit better, but the one thing that would you would get destroyed on would be conventional. If you have a 640 and you're trying to get a conventional loan, especially if you're not putting 20% down, or if you have high debt to income ratios or whatever, you're going to get punished. The difference between an 840 and a 640 credit on conventional is huge.
It is massive. So here's the thing.
Was huge.
But here's the whole key in a nutshell. The Fannie Mae, Freddie Mac conventional loans were not meant to support. That wasn't their initial charter. That was in their initial drive. We instituted FHA. We instituted that HUD loans, basically in a nutshell, right? In order to help get the average consumer who's got some struggle on maybe credit scores, struggle on down payment. Maybe they needed some down payment assistance. Maybe we needed to stretch their ratios and buying power.
Right.
That's what FHA was designed to do. It's a great loan. It's a great product.
No, I know. So you're saying now conventional, if you're over 680 credit, and you're calling it a penalty. What are they calling it? I don't think they call it a penalty.
They're calling it a supplement.
They're calling it. So what does it show up like on the paperwork?
What it's going to show up is they're either in higher cost in the points or it's going to show up higher higher rate. We don't know the exact transition, but all we know is this: they're charging higher. No, this is what.
But
blows
is this
my
like
mind.
$50 or is this like $500 or
It still adds up
$5,000
over time? But here's what I want you to think about this. Ready? So typically somebody who had down payment, somebody who had really good scores, right? They didn't normally go FHA.
Right.
They went conventional.
Well, if they had the money to put down too, that was
Right.
the other thing. It's
But
like the big
somebody
differentiator
in
is
that
the money to put
conventional
down.
bucket, right?
Yeah.
Okay. Here's the key: if they got low credit scores, or they're going to be stretched, or they have limited cash, Brian, they're not going Fannie Mae, Freddie
But how
Mac.
much is it though? Like how much? Because again, like I think that's where this matters. This is
Sure.
a $50 fee. I feel like this is just one of those things. Where, we're paying. It's like
It's
$50.
all relative to the loan amount that you take.
Okay.
out.
Do you have any
just can't say
idea
it's
like what the
$50.
numbers are? Like on a 500.
No, we don't have the exact number drilled down. There's
do
some
you
examples.
think it's
$40,
hundreds or
$50.
thousands or is it like?
It's just $600. Basically a year if you had a $400,000 mortgage. But here's what I want you to think. Stop. Now watch. $600 times 30
I know,
years.
but it's not a annual fee.
No, it's not. No, you're going to pay it in your rate forever.
So you're going to get a higher interest rate.
Correct.
But how would you know? Because the thing is, like as you know, if you have a 650 credit and an 850 credit, you're going to get a way better interest rate at 850 credit. I'm suspecting you're still getting a better rate. It might not be as great. But you won't even know it because it'll just be built into the rate. So let's just say, for instance, today, let's just use an example. You get a 650 credit score and you have a 7% interest rate. And then you come in with an 850 credit score and you get a 6.5% interest rate.
That's substantial.
And what you're saying is it might be 6.625 instead of 6.5. But you wouldn't know that. It's just now it's just going to say instead of saying 6.5, it'll say 6.6.
So what's going to happen is this: it's the government just collecting extra money to quote unquote put into the lower, strategy pool, if you will, right? The folks that have more struggles, but they're not using Fannie Mae and Freddie Mac loans, Brian. That's my whole point. They're going to probably use FHA because FHA is a great product. I mean, the PMI is 0.55 across the board, with 3.5% down, which is amazing.
It's not better than conventional, though. If you're going to keep
but the rate is typically better than conventional financing.
That's
so when you take into consideration the rate is better, number one, and you're putting 3.5% down, and they'll go down to, most people cut off at 580 credit scores. Brian, they go to 500 credit scores.
But I feel like that what this really comes down to is how much money are we talking about? We're talking about $500 one-time fee.
It's just no, it's not a one-time fee, but it's the principle.
But you said it could be either higher fees or higher interest rates.
It's most likely going to equate to about 1/8% higher in the rate. But here's the thing:
really,
it's the principle of the thing. It's like every time you go, and now they're going to charge you more tax and more tax. And what are we doing to control the government? What are we doing to prevent this money from going to some other crazy pool? There's some kind of another strategy they have in mind. If you're making all this money from Fannie Mae and Freddie Mac, where did it go, Brian? That's my point. That's my question to you. The last 15 years, where did all that profit go? And that's the question. And why did the banks get released and not Fannie Mae and Freddie Mac?
I choose not to get upset.
I'm not upset.
I'm just saying there's nothing I can do about it. Every tax essentially is taking money from some people and giving it to another for something, somehow, some way.
But in this case, we really don't need it. What we need to do is we need to have a better product when it comes to FHA HUD.
They just made the FHA more attractive by
extremely attractive. And that's my point. Why did it become more attractive though?
They lowered the funding fee.
They lowered the monthly mortgage insurance. And why did they lower the monthly mortgage insurance?
Probably because they were making a bunch of money and they didn't need to.
No, that wasn't it.
Because that monthly mortgage insurance is basically buying an let's just like back up for anybody who doesn't understand what all this means. Like here's the way I used to explain it to people. If you're not putting 20% down on a house, you're putting the bank at risk because if you stop making your payments, they have to then foreclose on you, hire a real estate agent, make repairs, put it on the market, hope the market's good. Like they're taking a risk that if you don't make your payment, they're going to incur costs, they're going to lose money. In order not to lose money, they offer mortgage insurance. And then people used to be like, oh, I don't want to have to pay mortgage insurance. Like, well, the alternative is come up with 20 to 25% down.
Correct.
And even then, it's not necessarily, because we just discussed, unless you have great credit, it's still going to be dicey. Because if you have 650 credit and you're putting 20% down,
sure,
sometimes FHA still makes sense because of the interest rate. Because you get crushed.
Does. And that's the whole point.
So just to back up. So anytime you're putting less than 20% down, you're putting the bank at risk somehow. So conventional loans are covered under Fannie Mae and Freddie Mac.
Well, that's just a lot of conventional loans.
A lot of them, they do have portfolio loans.
Correct.
But most of them that you're going to get are called covered loans. And anytime you're putting less than 20% down, they either have an upfront mortgage insurance or a monthly mortgage insurance or a combination of the two, or it's even sometimes can be a lender-paid mortgage insurance. One way or another, there's a fee that gets paid that essentially buys an insurance policy that says if you stop making your mortgage payment, this money will cover the bank.
Correct.
Then you have government loans. You have FHA, VA, USDA. I think that's basically it, right? Yeah. So VA has a funding fee.
Unless you're disabled.
But it goes up to like 3.3%, which is a lot of money. Like we're talking $500,000 house.
Correct.
$15,000, $18,000. And then FHA has not only a funding fee up front charge, they also have a monthly charge, and then USDA has the same thing except for it's smaller on the monthly.
Yeah, so USDA is 1% up front, finance.
And all these programs, there's some form of money collected in addition to the payment that goes towards essentially an insurance policy. They pool all the money together, and when somebody gets foreclosed on, they cover the bank so that the bank doesn't incur the loss.
But it doesn't protect the consumer. Remember that. It's not.
It doesn't protect the consumer, but it does in the sense that prior to all these programs, if you wanted to buy a house, you had to go to your savings and loan, and you had to make the case to give me a loan. Now, the way that you would have to have qualified would have been minimum 20, maybe. I mean, back in the day, it was 50% down. It was like you couldn't get. First of all, you had to be a man. You couldn't be a woman. Like there was all this stuff. But at the end of the day, like because they spread it out over all these banks, because they collateralize and they mix them together and make them into securities, and they can sell them and all that, and they put them into financial packages where they can sell them. They allow everybody to pull together, and I think it does give the consumer an advantage. So I would say that you can live in Southern Maryland, make $100,000, buy a $400,000 house, put no money down using a USDA loan. I feel like in one way or another, it's still subsidized by the government quite a bit.
It is.
And it isn't like, it doesn't feel harsh. I feel like, I don't know what it's like in other countries, but I feel like what I watch people do, I feel like it's pretty easy to buy a house if you have 650 credit, which, all things considered is not like a perfect,
it's not
perfect
it's
track
a good,
record.
It's a good score. It's a fair score. You know what I mean?
So I'm not outraged by this. I feel like, I'm
outraged because the money being collected is supposedly going to Fannie Mae and Freddie Mac to promote lower, credit scores, promote clients that are a little bit more, challenged. They're going to get them into these loans. The whole purpose is we're going to get you into more house. Yeah, but most people get more house with a USDA loan, no money down, pay off your debt.
Well, if you live in an area that has that. So the only thing that I would say about that is like, at the end of the day, this is another way to create a scenario where you're allowing marginally qualified people to buy a house, which at the end of the day, here's what a credit score is. It is your track record of borrowing money and paying it back. That's all it is. And if you can't demonstrate you can borrow money and pay it back, the statistical chance of you missing your mortgage payment goes up. And then if you allow more marginalized credit scores, whatever you want to call it, you allow people that have a bad track record of borrowing money and pay it back to borrow a lot of money. There's a higher percent chance they're not going to pay it back.
Correct.
And then all it does is just raise the cost. So, you have
raise
FHA.
the cost on the good consumers' backs. So that's my whole point. I mean,
but everything's like that. Everything's like that.
Doesn't mean it's right.
The roads that we pay for, like I pay property taxes. My kids are homeschooled. I pay thousands and tens of thousands of dollars to pay for schools that my kids can't attend, and I don't get any tax credit for that. Like there's a lot of examples.
Tell you that's a choice you're making to do private school or homeschool, right? Versus public school. So that's a choice.
Yeah.
Okay, this is not a choice. The consumer does not have the choice.
Yeah, but again, I just feel like that's the definition of government. Like there's every which way that we give money to the government, they give it to people that we wouldn't necessarily give it to, or we wouldn't want them to give it to, or they don't deserve it, or whatever. I mean, just everything just by nature, the way government and taxes work, you take money from a whole bunch of people and then you spend it on this, that, and the other. Like even the roads. Like, have you ever driven down a road before? Like even in Southern Maryland, I was on one the other day. I was on the Eastern Shore and I'm driving down this road and it's like 40 miles long and there's no houses on the road. And I'm thinking to myself, how much does it cost to pave this 40 miles of road? And there's literally, like, I looked in front of me and behind me, there's not a single car. And I'm in rush hour traffic, and I'm the only car on this road. I'm thinking to myself, somewhere along the lines, there's probably some government money wasted to keep this road here.
Now, let me ask you this.
Yeah.
When you got to the house, did you get the listing?
No.
Why didn't you get the listing?
It's a long story. I felt like I almost got murdered.
So maybe that's what I tell you. When you drive down long roads,
you almost get murdered.
Maybe there's a story behind that, Brian.
But it's still government waste. Like at the end of the day,
I don't think that's government waste. It's different. I mean, but the money's been like it's gas. You're talking about the gasoline tax.
No, I'm talking about the fact that the Federal Highway Administration pays money to pave these roads in the middle of nowhere that nobody drives on.
But I think that's a benefit. Just like you've got utility companies that string utility lines.
It's a benefit, but what if I like said, you know what? Let's maybe be more strategic about the roads. Like maybe Farmer Bob has to drive a little ways out of his way to get to the supermarket because we can't put roads everywhere because it costs a lot of money.
I think they do that now, Brian. I think you're just taking an extreme example. I mean, that's all there is to it. I think you've got to go back to your question. If gasoline tax is being collected and it's there to supplement the roads and the bridges and the lights and the infrastructure, et cetera, that makes sense. It's a public utility. It's done by all, and you pay the gas to pay the usage of those roads.
But I would say to be more efficient, we should focus on the roads that are being utilized more. Because then the other thing is, you drive back into civilization and you're just banging through potholes, and you're like, you know what? You should take the freaking money from this stupid road that's smooth as a baby's bottom that never gets driven on. That's why it's smooth, and fill in all these potholes or make an extra lane so that we're not stuck in rush hour traffic or whatever. Like I just feel like that's the definition of government. That's why, yes, we can jump up and down and say it's not fair, it's not right. And you're right, it's not fair and it's not right, and we should definitely fight it. But at the end of the day, like, I'm a peasant. As far as I can tell, you're probably a peasant. We don't have much more than a vote every 2 years.
Exactly.
Like, I am not going to be dying on that hill.
Well, true. I mean, at the end of the day, look, but
I guess maybe another way to ask the question: how outrageous is it? How outrageous?
Is
very outrageous in your
opinion. Because
it's
just another step. They take inch by inch, taking away all of. And at the end of the day, you're going to be happy that you don't own anything, Brian. 10 years from now, you're like, oh, I'm just so happy I don't own anything. They've given me everything. They own it all, but I don't really care. Scrap that, man. I don't want that. Do you want that? I don't want the government in my pocket every freaking minute. That wasn't the whole purpose of the Declaration of Independence. That wasn't the way that we were designed initially as a government. You know what I'm talking about? So they'll be taking your guns away next, man.
Well, I mean, at the end of the day, the way our government was designed was for the states to be little governments. And we can get into politics. You know what I'm saying? Like we could go there, but I think what I wanted to discuss today was what does this even mean? The answer is we don't know because you don't know how much it's going to be.
It's not going to be that impactful. But here's the problem.
And then how outrageous is it? Is it really going to? Well, let me ask you this: is it going to really affect the housing? People
are calling me right now saying, "What the heck is going on about this tax?" You'd be surprised, Brian. Everybody wants to know. I mean, it does have an impact, regardless. It's still money going out the door. It's like when you look at your credit card statement and say, oh, that's right, I had a gym membership 4 years ago and I haven't been to the gym lately. I mean, you know what I'm talking about. That's what it all comes down to. So why should you pay for something that I will bet you $100 that the money they collect, they cannot accurately reflect how it's going to support the different stage of people buying the home. It doesn't make sense to me. And again, I don't understand why Fannie Mae and Freddie Mac haven't become privatized, why they haven't gone back out on their own again. while the banks have. They just don't have enough influence.
Again, we could
So
go back and look at the 2008 collapse and,
Yep.
and whether or not any banks were held accountable from that. We can go back and look at the 2008 collapse and see that all the money we gave to the banks, did they ever pay any of it back? We could go back and trace trillions of dollars of money.
Trillions of dollars of debt that your kids, my kids, my grandchildren, my great-grandchildren, hopefully I have some.
I feel like somehow that we're not actually going to pay that all back. Somehow I feel like somehow that's not all getting actually paid back. I don't know.
And then make our government accountable again. Isn't that what we want to say? MOGAA. That's my new motto. Make our government accountable again. That's all there is to it, man.
Moaga.
Yeah. Otherwise, you know what's going to happen? They're going to start taxing 7-Eleven, that little bit of heaven, and you and I both know what's going to happen, right?
Yeah.
Exactly right.
So that's it, Tim. I feel like it's a little bit of a, what do they call that? A nothing burger. That's my opinion. Your opinion is a big deal. My opinion is this is a nothing burger. My opinion is at the end of the day, you can still buy a house, sell a house, get a mortgage, all the same as you could before. Yes, you'll have a little bit of a higher interest rate. I mean, you can always pay cash. We can make that argument if you don't want to pay any fees.
True.
Just pay cash.
True that. Yep.
Like you are borrowing money. You are at the mercy of whoever's giving you the money in all circumstances. So I'm not outraged over it.
And see, here I am. This is like opposite day for us, isn't
right?
It? Yeah.
Yeah.
Yeah. You know, I look at the world in general, Brian, and we need to start making things accountable because at the end of the day, we're going to spend so much trillions of dollars in debt, right? And I just want the best for everybody, man.
I have my opinion, and we're gonna get to a little philosophical here. My opinion is that the human condition is such that people are going to go towards the lowest common denominator, and I think it was Benjamin Franklin said that once the people figure out they can use our government as a piggy bank, then we're all in trouble. And that's kind of what's happened. Like we've kind of told everybody, hey, if you vote a certain way, you can get your situation better by taking from other people. And that's kind of the direction we're headed. And then there's all this political stuff behind it. But I don't think that it's anything we're going to be able to stop. And I think it's human nature that's ultimately the cause of all of this, and human nature isn't going to be any better. Like people thought that the United States and the world we live in is like an evolution, that human beings have been evolving and we're a higher state of evolution. Sure. I disagree with that. I think we're actually just as devolved as we always have been. We just have been very comfortable. But if we get in the same situation as we were, we'll all be killing each other just here. Just give it a minute.
Not so much. Not good, right?
Yeah. So I feel like there's not a whole lot I can do about it. I can't change the human condition, and I think it's foolish to think that you can. I feel like the best thing that you can do is, all right, I'm gonna leave you with this. All right. So I heard this on a Joe Rogan podcast by a Navy SEAL, and this is offensive to a lot of people, but I feel like this is very true.
Go ahead.
Okay. Picture a dartboard. All right. You have the outer ring. You have that big space. Then you have the little green ring, and then you have the red dot in the middle. Okay. Right. The red dot is you. That's you and what you can personally control about yourself. Okay. The green ring, whatever you call that, is your friends and family and people that you have influence over.
Your sphere of influence. Right? Yeah.
The big giant outer ring is the whole rest of the world and what goes on, things that are out of your control. It's just what happens around you. He makes the point, and I agree with this. Most people are very, very focused on the outer rings, and they're focused on what the government and Joe Biden and Donald Trump and Putin and taxes and da-da-da-da-da. They're focused on all this, and they're just no. Meanwhile, they're not focused on what they can control.
I agree with you.
And maybe that is a way to distract yourself. Maybe that's a way to take the responsibility off your current set of conditions. Like, your current conditions aren't great, so let's blame somebody else. Maybe that's part of what it is. Part of it is just a distraction from human beings like to feel distracted.
Sure.
Part of it is human beings love to feel outraged. Like, oh, I can get behind this cause and I can get outraged and I can be like, rah, 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 we're fighting the good fight. Yeah. Another part of it is people like to feel part of a bigger thing. So it's like, oh, all these people they're outraged and they're fighting over this thing, and I want to be a part of that. So I say, you know what we need to do, guys? Let's focus on that green ring, because there's people that depend on us and that need us, and we can always be a better version of ourselves. And let's focus on that red dot in the middle. And let the outer part kind of handle itself. And as long as you do what you need to do, the rest will all take care of itself. Not that anybody's going to listen to me.
I wish that was the case, man. I only wish
Not that anybody's going to listen to me at all, but I think it was a beautiful analogy.
There you go. I hear you, man. All right, brother. You all right?
Yeah, you want to finish on that one?
Yeah, that's good, man. I'm there.
All right, Tim. Congratulations on your new studio. You look good. You sound good.
Dude, I feel solid, man. I'm serious. Oh, yeah.
All right.
People are calling. What the heck?
Yeah, I know. It's obviously working.
Yeah.
Look,
another one, man. Look at that.